Everyone, this is Dr. Duru from the Market Breath working with Ahan Analytics. So let's do a quick review. Today was a major reversal day to the upside, whereas we've been seeing a lot of major reversal days to the downside over this year that produced fake topping patterns. Sorry, I should say they were real topping patterns, just that this market has been so bullish, they didn't last. Well, the last bearish setup also did not last long. So I am forced off of my bearish position and I am moving to neutral. So that's why I wanted to do a quick review of what has made me change my mind so quickly yet again. So this is a swing trade bot. As many of you know, this is my favorite stock scanning tool. I have a subscription, so some of the things I show may not be available. The basically everything came up green. So let me just show some key things here. The S&P 500, you'll see some key signals crossed above the 50-day moving average. This is because the index itself crossed above that average. I'm going to show some charts later. Another one that's very notable is this bullish engulfing pattern for the small caps. That's the Russell 2000. Hammer candlesticks. These are all signs of a major reversal in the stock market. And the Dow as well had a hammer candlestick as a key signal. Now, while the advancers and decliners were, not that different, so 3,000 advancers versus 2,600 decliners, that doesn't look so dramatic. What was dramatic are the signals. So obviously a lot of more new highs than new lows, but most importantly for swing trade bot, we had almost 4,000 bullish signals versus almost 2,000. So twice the number of bullish signals than bearish signals. So that to me was a big tell. I'll skip over that for now. And the last thing I'll just show is the unusually active signals for the day are all dominated by bullish signals. And you can see the key things that I picked up: bullish engulfing and hammer candlestick. Oh, and the morning star is another one that shows all of these are like bottoming signals. Another reason why very important, if you're bearish, to just step aside, let the market do its work. Now, typically I would go into some of these scans and pick out some key stocks. Hopefully you have a subscription by now. You can do that yourself. I instead want to go to the charts and I want to keep this review short. So let's first take a look at the S&P 500. This was the key action here. Notice, I mean, things look pretty bad at the lows of the day because the S&P 500 came off of this 50-day moving average resistance. That's the red line, and came right to the low from last Friday. This was part of the bearish setup that I identified last week. Came right there, and even though it was below the lower Bollinger Band, I still expected that this to confirm the resumption of the bearish signal and then to see more downside, perhaps even going into next week's big Fed meeting. Instead, buyers had a different idea. NVDA was a big part of this, I believe. The CEO had some good things to say at the conference, and it just basically, NVIDIA is just controlling the mood of the market. If NVIDIA is going to soar, then people just want to buy everything. Actually, let me just flip over to NVIDIA really quickly so you can get that visual. So you can see NVIDIA soared 8.2%. Now it's right at the 50-day moving average resistance, so it does have a little bit more work to do to get back into good form. And it also has to beat out this resistance, which was a lower low. Anyway, we'll save NVIDIA's analysis for another day. Let's go back to the S&P 500 because the S&P 500 also has some work to do. The bullish engulfing topping pattern is still in effect. So buyers need to get above this to invalidate that signal. Those of you who read my blog at drduru.com/122/blog know that this end of the August made it look like the index was about to break out. But this quick reversal is what started up the bearish pattern. It also set up what still looks like a kind of a double top. So buyers still have a lot of work to do, but breaking out above this 50-day moving average is the first step towards that point. Now I am neutral exactly because, well, I was just bearish, but also because I want to see buyers get over this hump before I go back to a bullish bias. Let's take a look at the NASDAQ. Oh, sorry, wrong symbol. The NASDAQ soared 2.2% today. It is right below converged resistance at the 20-day moving average and the 50-day moving average. So it has some work to do. But, if NVDA gets through its resistance, you can expect the NASDAQ to do the same. Let's take a look at the small caps. I've been in the habit of buying the dips, so I was fortunate here that I was buying IWM right around here, and it surged back up. It only was up 0.3%, but still, this is a good comeback. And there is still, even if this is a fake or relief rally, there is still some room left to go to get to this natural resistance point. So let's end this with a quick look at the VIX because the volatility index has been a big part of the story lately. You can see here that once again, the sellers or the long balls, just, as usual, they don't have much firepower to keep the VIX going higher. Fear just gets exhausted. Fear doesn't last long and exhausts quickly. So, we had the volatility index. Last week was the big day for it to pop up. Today, it's been melting, melting, melting. Lastly, let's take a look at the currency markets. This is very important. A lot of stock folks don't pay attention to this, but the carry trade has been a big headliner. You can see my blog where I talk about that. I am keeping a close eye on the strength of the yen. While a lot of people are looking at the cross for the US dollar and the Japanese yen, I'm actually looking at the Australian dollar and the Japanese yen. And again, I've written about this on my blog. I won't go into the details here, but you can see right here that the Australian dollar versus the Japanese yen made a hammer pattern. And I was watching this very closely as this currency pair was creeping back out of this extended down position. I immediately assumed that buyers would be turning the tables on the bears in the stock market. And sure enough, that happened. Now, again, need to see follow through. But of course, if there is follow through, look what happened last time after the carry trade fears or the yen strength was done. It resulted in a very extended rebound. So that's something to keep an eye on, particularly if the Australian dollar versus the Japanese yen gets above this short consolidation pattern. All right, well, that's all the review I'm going to do for today. Check out the blog for more details. I will be writing as usual this weekend. Again, that URL is drduru.com/122, all one word, /blog. Please leave comments in below the video, subscribe, and I look forward to seeing you another time. Thanks for checking this out and have a good one. And of course, all honor and respect due to the victims of the 9/11 terrorist attack. This is September 11th, 2024.